I apologize. So that's hiccups right off the bat, but we're all better now. So yeah, this is something that's very exciting that we're going to look to do going forward, where I'm going to pop on these Mondays. We're going to talk charts. We're going to go over kind of what's happening in the market right now, what happened maybe during the last week, try to get our handle on kind of what we're seeing and potentially what we could be in for going into the next week. So this is going to be same recurring show that's going to happen at the same time, and I very much encourage participation from you guys, right? If there's any charts you want me to look at, forex, crypto, stocks, whatever it is, I can take a look at it and give you my opinion as a CMT. So a quick just high level of who I am, who's talking to you right now. My name is Michael Nauss. I'm a chartered market technician. So essentially just means I've done a lot of studying of charts, both academically and then just personally for my own trading and investing. I've worked in the hedge fund space for about 10 years before this. So I was able to kind of get an idea of what institutions do, how they trade, how they think. That's definitely helped me out for the longer term. On top of technicals, I do a lot of quantitative work. So I'm looking at things like statistics of when this happens. Does that usually happen? What happens if you buy all-time highs versus buy all-time lows? All this kind of stuff. I really take a big deep dive into. So not going to be the guy to talk about fundamentals and whether or not the company is a great company or the drug is going to do an amazing thing. But I think we can get a lot of what we need to get on the charts when we load them up. So without further ado, let's just do that. Let's actually load up here and let's grab these charts here and start right over here. So this is kind of my home. This is a place that I look at all the time where I want to just focus on what's up the most today and what's down the most of the day. So I gathered a whole list of ETFs, different tickers, different, looking at different sectors. Some of these are thematic ETFs as well to try to figure out where's the money flowing into each day, where's the money flowing out of each day, and then overall we can generate themes and we can actually look at this for longer term periods of time as well. So I'll show you the year to date version of this in a little bit. Now what we're doing right off the bat is trying to look for themes, right? We know the market. If we just do a quick look at the overall market, not a whole lot going on. We're struggling below this prior support, which I'll talk about. If we look at kind of the 5-minute chart just to see what happened so far today, if we mark the pre-market lows and then we mark these highs right here, or the highs from yesterday's range, we've just been bopping back and forth within those, right? We haven't hit new all-time highs, we haven't hit our new daily highs, we haven't hit new daily lows. We're right in the middle. So can we gather anything from just looking out and saying, okay, what is happening overall here? Now, should notice some themes, and if not, I'll go over them for you. First of all, PSIL is very interesting. This is a psychedelic sector that's been doing very well since the beginning of the year, so something that I'm really focused on as a kind of sector when it comes to what's happening here. Now, the rest of these things are very energy related. They're very Jim Rogers always used to have a saying, if you dropped it on your foot, would it hurt, right? So USO is the next hottest sector that I'm looking at. Nice breakout yesterday and really good continuation today. If we go to the oil space and hit a daily chart, right? Been stuck in this range for 2+ years now, broke out of that range, and now we're fighting these prior highs really, really strong in oil. But that theme carries. We have, right, KRBM is Crane shares, but it's a carbon strategy, so it's like carbon based ETF. We have XLE, which is just energy, SLX, which is steel, XES, which is oil and gas, right? Oil here, wheat, corn. Noble is a dividend ETF, so a lot of those are oil and natural producers. And then down on the bottom, we see the Qs down 1.9%. WGMI is Bitcoin miners, that's also down. We have Bitcoin down. So if you just look at this and you just split the two, you say, what is up? Well, again, wheat, oil, DBC is commodities. So commodities, energy, up. When it comes to technology and that kind of thing, that's down. So a big split happening in the market. And this just hasn't been happening today, but we've seen this happening all year. So let me change this to year-to-date change right here and hit apply. Year-to-date change and where is it? Year-to-date change. You'll notice the same thing, where basically what we're doing is we're having this split occur. So this is we're only 6 days, 7 days now into the year for trading wise, but you see the split continuing. Corn, XLE, natural gas, oil, all of these things are up from an energy point of view. Technology, that's down. So now we have to sit back and we have to ask ourselves, is this just a blip on the radar for the first 2 weeks of the year where we're seeing energy do well and we're seeing everything else pretty much do poorly? Or is this the beginning of a trend? Now, quite often what happens at the beginning of the year, you have funds who spent all of the end of last year not trading, but coming up with their bets for what's going to do very well into next year. The reason they don't trade into the end of the year, they wait for the beginning of the next, is two reasons. One, they're bonuses. If I'm making a bonus based off how well I did in the market last year, I'm not going to want to mess that up in December. The other thing is taxes, right? Say I own Nvidia in my hedge fund and I could either sell it in December and have to owe Uncle Sam a whole bunch of money, or I could wait until the next year and I could sell it in that next year, kick that can down the road just a little bit, deal with that problem another day. You see that a lot where the leaders, they start to come down. Some of these laggards, they start to get bought up where the people take the profits from the leaders and they put them somewhere else. So I'm starting to think this split may be something that continues. So going forward, this is something I want to keep an eye on. I see a lot of tickers coming in. That's absolutely fantastic. That will help make this go so much easier with your guys' interaction. But the so what I kind of want to note is that if you're somebody who is only generally trading large cap tech and all that, it might be time to reconsider that. Might be time to say, okay, I'm going to expand my trading out. I'm going to expand what I watch out into other names, natural gas, oil. Now, even if you're a small cap trader, you're a micro cap trader, you want to go where the action is, there's a lot of these little names that will just pop up out of nowhere when it comes to looking at these commodity sectors, right? A good example, I know a lot of people wouldn't have thought of this way back when this happened, but SMR was a little tiny dollar stock way down here, and then nuclear got big, and look what happened. So, I know these are less interesting sectors than quantum computing and, biotechs and AI related names. I don't think you would ignore them though, because they are. I think if you're a small cap guy, you take what I'm saying and saying, we're getting this rotation into energy, we're getting this rotation into metals, and then maybe you filter that down. You say, okay, well, I only want little guys. Find little guys, right? Find little oil names, find little natural gas names. Healthcare is another one that's very interesting that I've seen on that list quite a bit, where healthcare is bouncing. But look at this. Let's just do a quick comparison here, right? You don't need to be a CMT or anyone fancy. If we look at the SPY, right, we're down below support. We've been in this down trend for a while now. We broke support today. So keep this chart in your brain. And then now let's go XLE. Look at what's happened in the meantime. So SPY, which is a very tech heavy index, has been moving down. XLE has been moving up. So it's kind of behooved people to focus on these things and to focus on some energy names and try to see what's happening when it comes to that. So now let's quickly just go again back into the action, what we see on the SPY, and then we'll start going through some tickers. So S&P 500, like look at this. This is a 30-minute chart of today. So here is yesterday's or Friday's low right here. And then you can see we've come up 1, 2, 3, 4 times to hit Friday's low and we failed. So if the pre-market low gives way, then all bets are off. If we can retake this low, which would be this level right here on the daily chart, I think that's very interesting. The reason it's interesting is you can see 1, 2, 3 levels of support right here. We got here a bunch of times, we bounced. There's a lot of investment that happened here, both monetarily and also psychologically. It's very important that these areas, if I'm someone who bought there a bunch, I want to see this area hold. So we have to see what happens going into the end of the day. If we can retake this is roughly 380 on the SPY. If we can retake 380 on the SPY, then things are looking good. If we close dramatically below 380 on the SPY, then I'm getting a little bit worried. Not crazy worried, but a little bit worried that things might not pan out correctly. So that's just the overall market. Energy good, technology bad, and then this very important level on the SPY, which also lines up with some important levels here in Bitcoin. I've taken this. This is my super advanced, mega technical analysis on Bitcoin. We are stuck between 90,000 and call it 110. This 20,000 point range, which for any other security would be a lot. For Bitcoin, it's not very much. We keep chopping below that range. You can see we undercut it today. We hit 88, and then we started to bounce again. So until this resolves one way or another, I don't really care too much about crypto. It's just going to, whatever, if it breaks up, I think it'll be a great trade. If it breaks down, it might be a great short. But I like to use crypto, even if you're someone who's listening who doesn't care about crypto. This is a very good bellwether for risk on and risk off behavior. If Bitcoin is ripping, people are generally not worried that the economy is going to fall apart and their jobs are awful and things are going to cost $1,000,000. That's generally not the way it works. It's a very risk on asset. You can look at and you can chart it versus the Qs. You can chart it versus a bunch of different assets. Generally does well when people want to take on risk. Generally does poorly when people don't want to take on risks. That's why I'm watching Bitcoin. So we have some levels, right? We have some very clear levels here where call it 90,000 to 92,000. We need to pay attention. Now, these wicks underneath, if they get reclaimed and say we close at 94,000 today, for me, that's incredibly bullish. It means the market tried to push it down, tried to run some stops, because you better believe there's probably a whole bunch of stops under here. The institutions use those stops as liquidities. They ripped it back up. If it ends up closing below this area, that means it was just breaking down, right? Just breaking down. So all right, let's start taking a look at some charts here, some individual names. Now that you kind of have my idea of the overall theme of what I think of the market, that may curb you to some of these things that I may like and may not like. We'll go from the bottom up. We'll start here with Intel. Now, one thing that is very heavily studied, I mentioned my big quantitative and statistical side when it comes to trading. You can find tons of studies. If you hit me up on Twitter or StockTwits or whatever, I can send them over to you. But there's tons of studies about buying strength and buying relative strength versus buying relative weakness. Intel is got to be the worst, if not one of the worst semiconductors out there, right? For such a big company, it's just been a massive dog. You could have bought anything, even SMCI, which has got like DOJ problems, has been outperforming Intel in the long run. So I get the idea that traders want to buy low and sell high. It's what they've been taught. It's horrible when you look at statistically. You're better off to buy the strongest name out there if you want to get involved in the chips area. Generally speaking, you're better to buy something like an Nvidia or even like an MU or AMD or something that uh, isn't doing great, but isn't doing nearly as bad, right? If we zoom out on these charts, right? AMD, and then if we zoom out on MU, right? All of these things are holding up way higher. And then we go to Intel, right? We're sitting right at lows, and I think all-time lows, or if not all-time lows, very, very long time ago lows. So that's just out of the way, right? We want to buy strength. We want to buy things in uptrends. You can do a simple study yourself. What happens if you buy stocks making 52-week highs and you make a basket of those, and then you buy stocks that are making 52-week lows and you make a basket of those, and then track those every year? It's a pretty easy study to do yourself. If you don't believe me, you can go through and you can track those, and it happens exactly the way we think that it would happen, where buying 52-week lows generally outperforms 52-week highs, because if a name is beating down, it's hitting new lows, probably doing it for a reason, and it's definitely something we have to pay attention to. Now, for a short-term trade, if you just want to take a shot, you're at a clear level of support, right? Again, support and resistance and things like this should be obvious. Anyone who says they have a super secret refined system and they'll find the support area and the fair value and the blah blah blah, it's all nonsense, right? Support works because there's generally a lot of people who will buy at a certain area. If they've seen the stock bounce at an area a bunch, you'll have a lot of people that want to buy there. You'll have a lot of shorts that are going to look to cover. If I'm short Intel from $26 and I see that it's bounced here a lot around this $18, then I may cover my short. So those are both things that do buying. And you want to think, what are the long participants doing? What are the short participants doing? And if you think, right, the shorts have never covered and you have a tinfoil hat on, then just don't think about what the shorts are doing, right? Shorts are trading just like the longs. They short something, they cover when they're up money or when they think the trade is done. So it could be some support. It could hold. You never know till after the fact. So the two ways to look at it is, one, kind of like what I talked about with the S&P 500, where if we undercut the current level and then rally, or with Bitcoin, sorry, if we undercut that current level and rally, that means that the institutions needed a place to buy. So they waited for this support to break and all these stops to trigger, and then they bought there. That's one thing. The other thing is you just wait for it to bounce significantly off the support, and then you can use that support as a level. So if we bounce and maybe we got above this 21, you take your shot, your stop goes around 18. If you're right for a long-term trade and this is going to be the bottom of Intel and it recovers, that's great. I think it's a little bit presumptuous, I guess is a good word to use, to think that I am going to be able to bottom tick Intel. Right? That I'm going to be the one that's going to be able to buy it down here because it's got a level on a chart and say, hey, it's going to rip to new highs. I would rather buy something that is strong and pulling back. I'd rather buy something that's breaking out to new highs. I would rather do something like that personally, but again, that's entirely up to you. I see GRR talked about this with Jordan on Friday. This has a history of doing exactly what it's doing. And it's another good exercise to have. Strong companies, strong stocks. Let's look at a strong stock. Just go to NVIDIA. Let's look at a strong stock where when it rallies and it pulls back, it doesn't give that whole rally back, right? We rally in through here and then we give some back. But we didn't give it all back. We gave a little bit back. We rally, we give some back, a little bit back, not all of it. That's what a strong stock does. And let's just think about why, right? What I like to do, what I do a lot of, is completely demystifying technical analysis. I think technical analysis gets a bad name because you see the people that draw all the weird lines in the charts and their charts are unable to be read and they think there's some sort of voodoo that they can do there. But let's think of what actually technical analysis is and what's actually happening. If a stock rallies and only gives back a little bit of that rally and then it rallies again, or it rallies and then it chops sideways for a while and then rallies again, what that means is that the stock rallied. Some people said, I'm going to take some profits, and they're sellers. So they're selling it down. Then there's also some shorts, and some shorts are probably saying it's rallied too hard. I'm going to short it. So you have those two people selling. But it only gets to go down a little bit until people who are very excited, that are very sad, I guess, that they missed the rally, they were able to get involved. We can focus on just one. Let's focus on this rally right here, right? So you have this initial move. And then you got to say, okay, well, what happens after this? So you have this move, and then what happens after this? If they're able to sell it all the way back down, that means that there was a whole bunch of sellers up there and a whole bunch of shorts. The sellers took their profits, never wanted to come back again. It was just a momentum play. That's it. I made my money. I'm out. The short sellers are able to short, and they don't see anybody getting in their way of this thing coming all the way back down. That's not good. It's not what you want to see. Now, if we rally and then either move sideways or pull back a little bit, it means that as it was pulling in and as it was selling off, there are short sellers who are very quick to get out of their position. They're nervous. They don't think this thing's going to go all the way back down. And then also you have people who missed this initial rally and they're saying, oh, if I can just get a little bit of a pullback, I'll buy, right? So they missed the rally from, say, 45 all the way up to 90. They say, oh, this thing doubled. I knew it. I really liked NVIDIA. I like their graphics cards or whatever. If it pulls back, I'm going to buy some. So what happens is you have everybody in the world looking to buy, whether they're shorts or whether they're people who are looking to buy pullbacks. So that creates shallow pullbacks. Now, something like GRR, what happens with this name a lot anyway, and again, this could always change. We're always just talking about probabilities here, is that it rallies a bit and then it gives it all back. And then it rallies a bit and it gives it all back. And then it rallies and then it gives it all back over and over and over again. That is the history of this company. That is historically what has happened. People are very happy to get their money and get out. And it's a momentum name. There's nothing wrong with trading momentum names. You can make a lot of money trading. There's a lot of traders that's all they do. They buy the hot sector, the hot stock, whether it's quantum computing or maybe it's psychedelics next or whatever it is. They buy that sector and they make hay while the sun shines and then they leave. They're in and they're out. But when you look at a stock that has a history of this and you're thinking in probabilities, you're saying, well, is this time different? Or is this time just going to be more of the same where, right, it rallies and then it starts to give it all back? So what I think you have to do is you just have to look at what is the depth of this pullback. And of course, you won't know that till after the fact. You'll only know how low this is going to pull back after the fact. That's fine. You don't need to, right? With that Nvidia chart, for example, that was at 40 bucks. He had tons of time to get back in after that pullback and still do absolutely fine. So that's what I'd be watching with GRR is how deep is this pullback? If it gets too low, then it's probably just going to repeat the same pattern where this thing gets hot and then everybody leaves and then it comes out with another event somewhere down the line. But right now it's a momentum stock that has broken. So you just want to see. So ideally, it digs in for a couple days, right? Maybe it comes here and then it just chops around like this for a while. And then it looks like it starts to break out. And then maybe at that time, that's where you can start to get involved as you're like, okay, it looks like it's found a level where people are coming in to buy it. And then that's where I'm going to get involved. I'm not just going to buy right here as it kind of sharps right back down there. All right. And Nike, NKE. This is another one. Let's look at this chart. Let's study this for a second. Let's really cement this into our brains. And then let's go back to Intel. Same chart, right? It's a beaten up name that's sitting right at that level. So a lot of the same comments are still going to hold. For me, I don't want to buy the thing that's broken when it's at its lows. I would want to buy something like Nike as it's breaking to new highs. So like say for example, it gets back above this 80 buck area, which is kind of right here. Let's say it gets back above here, this $80 area, and starts to break out. To me, that's more interesting because now it's shown that it's holding the support. It's now breaking resistance. It's starting to move a little bit higher. At support, I think it's the same play on Intel. You could lean against the support. Your risk will be very, very, very tiny, right? Maybe you buy it at 72 and then your stop goes under this, enough under this that you're not going to get stop run like we just saw on Bitcoin. But 68, 67, whatever it is. And okay, I'm risking $5 a share. If I'm right, hopefully I make $10, $20 a share. If you think and Nike's going to turn around. But again, I think it's the same way. I think it's really presumptuous to think that I'm going to be smart enough to know that this is going to be the low of Nike. Right? That's a worrisome to me. And then again, in the long term, this thing's just selling off. Remember, the SPY is like 5% off of its all-time highs. Right? We're down 5%, and it's funny, everybody's losing their mind. So the question is, why, when the SPY is only down a little bit, is this now down 60% from highs? Right? Is there a bunch of hedge funds, large institutions that have done their math and said this guy's done? Who knows? Right? Now, again, if you really like it for some fundamental reason, you got your level to play off of. And there's nothing wrong with that. For what we're trying to do with technical analysis, we're trying to play the probabilities. And sometimes that's how much I can be correct based off of certain things. Like I talked about, buying new 52-week highs has a way better win rate than buying new 52-week lows. The other thing is we can just manage risk, right? I know I want to get involved here. If it stops me out, then that's fine. I'll move on. And then maybe I'll get back in. That's the beauty of what we can do versus the hedge funds, which is a rant that I'll leave for a little bit later. But it really is our superpower, our speed of getting into and out of positions. Now there's Red Cat. Again, I'm looking at these purely technically. I don't know. Nike, I obviously know what Nike is. I obviously know what Intel is. But a lot of these ones I just have no idea. It's like GRR, I have absolutely no idea what this is. But this is going to be that same kind of idea that I had with, this one's better. The same kind of idea that I'm going to have with that GRR, where you have a momentum name. There's obviously a momentum name. It's come from $2.60 all the way up to $14. It's a momentum name. It's not happening because of a slow, sustained growth. We can see down here our EPS is negative 18 cents. So this is a money losing company. So whatever they're doing, they're betting on some sort of future growth, on some sort of future. This is drones, I think, just by looking at the news, right? We're hoping that this company makes money in the future. It's not making money right now, so it's going to be a momentum name. The question for me is, how deep is the pullback, right? You've got to move from 268 all the way to 12 bucks. It's a 6x, right? Amazing, amazing move. And now when we pull back, how deep are we going to pull back into? If we start to lose the area that buyers took control last, which is around the $6, $7, it might be lights out, right? It might be time to move on to the next hot story. If we don't, then it could be awesome, right? It could just be a little bit of a pullback and a move from there. That's how we kind of want to look at these things. Are these things going to just dip in a little bit and then move higher? Again, if we start to give back most of the move, then it's more likely that we will give back all of the move and then everyone moves on. We have to remember this company, at least as of its last earnings report, which wasn't that long ago, doesn't make any money. And this is a very expensive environment to not make any money. Right? If it's zero interest, that's fine. If I can go out and get a 5% on a bond, risk free without doing anything, it gets a lot more expensive to be a company that's not doing anything, that's not making any money. So, news events to pay attention to would be contracts, things like that, right? If I'm right and it is a drone maker, then everyone can make drones. There's nothing special. Again, these are just momentum. These are story plays, and those stories will come and they'll go. ACHR, Archer Aviation. All right. ARCAT, ACHR. Right. Both money losing drone companies have to be careful, just to see that these things aren't doing fantastically. Yes, they're strong. Look at something like FTAI. I don't know if there's another drone company, but this is something that's more trending well. This company is making money, right? It's hitting new highs, coming back a little bit there. But make sure that you understand that story stocks are generally stories in and they're generally stories right back out. You have quantum computing being the perfect example. If one guy can say one thing and your entire industry is cut in half, well, it's not a sustained growth type name that it's going to just grow over time. It's going to be more like Bitcoin. Could quantum computers be 10x higher 5 years from now, 10 years from now? Absolutely. Is that your time horizon? If so, then fine. If not, if you're just looking to take trades, right, you got to understand that these things are going to ebb and flow. They're going to get cut in half pretty easily. I would say a lot of these things are going to move together because there's not a lot of large institutions in names like this, in speculative names. This is going to be mostly retail. It's going to be mostly smaller institutions in names. So when the story gets going, you want to get involved in the story. When the story stops, you don't want to be the last guy at the party. That's the biggest thing, right? If it's the same with meme stocks, right? If you want to trade a GME the next time a Catman says something about it and you think it's going to spike 20%, that's great. Just know, just like all of these things, right? These are stories in which people will play the momentum and then they move on. These are all the times, right? Last year that things got interesting. They always move on. So just make sure you're not the last one holding the bag. I'm just making a note. Sorry. Yeah, you just don't want to be the last guy holding the bag, right? So let's keep going here. Trip Advisors. That's still a company. Yeah, same idea. This also just seems like a company. Now, this is pure fundamental speculation from a technical guy. Seems like something you could easily replace with like an AI assistant in like a year, right? Book me a trip, scan all the websites, save me a bunch of money. This chart is just not something that I want to get involved in at all. From $60 down to 14. You can bottom fish if you want. Those who pick bottoms have smelly fingers is something I was taught in trading. It's much harder to find a $100 stock that's down to 14. I think what happens is psychologically as humans, we look at this and we say, this is on sale. Same as the grocery store. I go and I see the apples one day and they're a buck, and then I see the apples the next day and they're 75 cents. I go, oh, those are cheap apples. They were a buck yesterday. It's not the same with stocks because momentum persists. Losers beget losers, beget losers, beget losers. Winning begets winning, begets winning, begets winning. And again, you can see as a Canadian, it always hurts me to bring this guy up. Yeah, got a little pop there. Could you have nailed that pop in BlackBerry? Maybe. This was once our darling as Canadians. $136 and down to zero. A chart that I always bring up to kind of show people this case is this is Microsoft. This is Microsoft going back until the year 2000. So if you got involved, say you were one of those, you didn't take my advice, you stayed at the party of the big tech companies for too long. But you were lucky enough that you chose Microsoft. You didn't choose any number of tech stocks that during the year 2000 went bankrupt. Tons and tons and tons, countless companies you never heard of came, were worth billions of dollars, completely vanished during the dot-com bubble. You were lucky enough to pick Microsoft and you said, I'm just going to hold this because I'm a long-term Microsoft investor. I really think it's going to be big. You were right, right? Microsoft is big. Most people right now are probably on a computer that's using some kind of Microsoft product, if not their operating system, something about it, right? Took you 16 years and 1 month to get back to even. So the question is, what could you have done in that 16-year time horizon? You could have invested in literally anything, right? The S&P 500, there were so many names that came and go at that time. There was giant financial collapses. There was all this kind of stuff, right? All of this happened in this 16 years and 1 month from all-time high to all-time high, right? So all the people go, oh, you just dollar cost average into things that you like and walk away. You could, but this thing just did nothing for years and years and years and years and years, right? So when I look at a lot of these story stocks, that's what I think of. I think of, do I want to get involved now, or do I just want to wait for the story to get hot again at some point? And then in the meantime, I've got my cash. I can do whatever I want. I can sit in T-bills, right? If I think quantum computers are going to be big in 10 years, well, let me just buy a bond portfolio and in 9 years from now, buy some quantum computing stocks, right? Same kind of idea that I'm thinking about with a lot of these names. So like Trip, if you go, man, I really think Trip is going to be the thing. Well, how long? Right? How long are you going to wait? It's been it's been in this range now. This starts going back 2 years where it's done nothing. So if you think this is going to be the bottom and TripAdvisor is going to rip forever, again, maybe. This looks a lot like the Intel chart. Looks a lot like these other charts. BBAI has AI in the name. It's got to be good, right? This is going to be another one of those momentum names, right? It's going to be another AI driven thing. It's going to be another thing that there's going to be all these stories around. There's going to be people telling you that this is the greatest thing in the world and it's going to change everything and all of that, but the market just doesn't agree right now. It's gone from $5 down to 3. I would say, generally speaking, trades like this are fairly simple because they're momentum moves. This is another one of those companies that does spike and then gives it back and then spikes and then gives it back. But every time it spikes, you've got some time. You don't have to buy it at the very bottom. When they spike, they definitely get some time. I would say $5 on this name. If you can get clear $5, great. If not, you got to go. TPAT. What's a TPAT? Oh, there's a petroleum name, so that's very interesting. This is kind of like what I was talking about. If you want to play my energy rotation theory and you want to play a small cap or a micro cap, this is one to do it. It looks like it's starting that momentum push, right? At least you're not getting it on the way back down. However, right, dog of a name, right, $155. I guarantee you this probably wasn't $115. It's probably reverse split a bunch because they're just hemorrhaging money. They're losing $2 a share for a $4 company. This is another momentum name. If it can get going right over this $4 area, which would be this high right here, could get going. Energy looks like it's getting hot. This might be one to watch, but just understand any chart that's just from $115 down to 81 cents is doing so because it's a bad company. At least right now, it's a bad company. It doesn't make any money. No one's interested in it. Doesn't mean these can't be little momentum pushes, but just means you have to be very, very careful, very, very careful when they are. Let's do GERN, and then we'll see what's new. GERN is interesting. Generon Corporation, just because of these gaps. So this is another technical lesson as well, right? The reason that we focus on things like support and resistance is where a lot of, like I said, emotional and financial investment can take place. You have a area like on Intel where for it to bounce off this area a couple times means there's a lot of people that put a lot of money in it. There's a lot of shorts that covered. There's a lot of, again, emotional and financial investment that's gone on in NVIDIA around $18. Sorry. So with GERN, what we're seeing is not so much an area of support and resistance, but potentially a gap, right? So I just highlighted the gap here. Now, why gaps are important is for a lot of the same reasons where I talked about before, where if we have these breaks, then what can occur is people who miss the move on this one from a buck 60 up to $3, that triple, or sorry, that double, as it's coming into the gap, they're like, okay, well, now it's roughly where I wanted to pay for it before I missed it because of that gap. I can get involved. Same thing with shorts. If I'm shorting this thing, thinking whatever caused this gap wasn't real, then as we're coming down into this zone, I can start to cover that position. And again, both of those things create buying. Sorry there. ENTB. ETNB. There we go. Yeah, another one hitting new lows, breaking support. This one at least has been a little bit stronger in the past, but this looks like it's breaking down. 89 bio, whatever we do. It looks like I've took some trades on it in the past based off those annotations, but this $7 was $7, 650. That was a big number. It looks like we're going below that. I would say just like on Bitcoin, unless this is a quick spike down and then we retake this later today, tomorrow, this week, I'd be very, very worried about this breakdown. It looks like, I don't know, something's going on. So yeah, I don't know. I'm reading the news here. I don't see anything crazy about it, other than there's some upgrades and things like that. But none of that generally matters when it comes to biotechs. It's just how close are they to giving you the drug that everyone wants. Baba. So Baba, I think I should start with just talk about FXI in China, which is going to be most of this anyway. For those who are under a rock, right? China had this insane move from like $25 up to near 40, so almost a double. And then ever since then, it's just been chopping around. I think these things are very, very interesting on this pullback simply because we had this massive move. And we had that big move because the government really got involved. The Chinese government was like, okay, enough. We are going to start pushing the value of our stocks higher. It's like how the Bank of Japan said, we're going to defend our currency. It's like in this case, we are going to start pushing and we're going to start pushing the price of our companies noticeably higher. Right? We're going to start lifting the value of our companies. When it comes to something like Baba, if the government's going to get involved, especially in China where the government controls a lot, that's the side that you want to be on. So the people who were chasing this run, I think had a really bad time. As it's starting to come down, now it's getting interesting to me. However, I'm not smart enough to know where this bottom, or if, right, if I'm right, and we're going to have another leg higher, the government's going to step back in and do some crazy stuff. I'm not one that I am smart enough to know where that's going to be. So there's a couple of techniques you can do. One is if you believe that Baba is going to bounce before we come back down to the lows here, which is my belief, you could do a dollar cost average thing. Now, dollar cost averaging, in my opinion, is way different from averaging down. Averaging down is I bought something and it was a bad buy, and now I'm down a bunch of money on it, and I want to put more money in so it's easy for me to get back to green. That's averaging down. That's very, very bad. You can blow up your entire life if you do that too much. Sad part about it is usually you'll make money, and then every now and then you'll just get killed. Now, a dollar cost averaging is a little different. You say, I want to put $10,000 into Baba because I believe that China is going to again defend itself economically, and it's going to put out more stimulus and lower interest rates and do all these things. Then you could say, okay, of that $10,000, I'm going to just start putting in $1,000 a week over the next 10 weeks, almost 3 months. That's fine. Uh, and that's probably the easiest or lowest touch way to do it. And then you set a stop for all that. You say, okay, now I'll get out of my position. If we break down to new lows, I'll consider myself wrong and I'll move on. So there's nothing wrong with saying, okay, as we're pulling back, I'm just gonna start buying. I'm gonna start buying on the way down. Another thing to do is just to wait for when something could change. Like notice that the change is going to happen first. So you'll start to see this news come out and an upward thrust in Baba, in FXI, in some of the Chinese names. And no, just like happened here, as this thing broke out, you had multiple chances to get involved and still get in on that momentum thrust. I think that's fine as well. The issue with that you're going to come into is that most of the trading in China is going to be done when the markets close for us. So you have to be okay with the fact that if you don't have a plan to kind of dollar cost average or to get in some way, that it may gap up 3, 4, 5% without you, and you're kind of chasing that gap. Which, if I'm right, and I think probably the person asking about Baba is with me, and we're going to come back to these highs at all, which is $121, and then through there, well, that's a 40% ish gain, 50% ish gain to that point, and then through that it could be even more, right? Same thing with, I know it wasn't talked about, but JD.com is very interesting to me, and the reason for it is that it hasn't pulled back nearly as much as Baba. And I think you can look at this, if you look at FXI and look how deep this pulled back, and then look at KWeb, which is the Chinese internet one, it's actually pulled back more. But JD, which I would assume is in the internet one, is holding on much better. So another way to look at it is, if you're interested in China, yes, Baba's in it, a good way to do it. We also have those ETFs that I just showed you, FXI and KWeb. But you could also just build a basket. You could find 5 or 6 Chinese stocks that you kind of like the look of, you like the name of, and then you go from there. I think a lot of, what you need to see is the whole world with China, I think, is waiting on the whole tariff discussion to end. And then I think it's also looking for the TikTok discussion to end. If those two things get hairier, these things are going to get more volatile. If one day they come out and they say, hey, no tariffs for China, I think that's when you get the rip. Problem with that is, when does it happen? Does it happen at a time that you can take action, or does it happen completely overnight when the Chinese markets are open? It's a little bit difficult to say. PLTR, Palantir. So this is another one that, not so much these crazy momentum names like a drone maker or a quantum computer or something where they don't have a business. I think they don't have anything to do. They're just betting vehicles by people who are looking to bet. Palantir is one of those things that it has a business model. It is making money. It is a profitable company. So that makes this pullback more interesting than the other ones. So I just want to differentiate those two. One, the pullback is just happening because, oh, look, we have a quantum computing company or sector that one guy says one thing and the whole thing gets cut in half the next day. That's not a strong sector. That was a momentum driven sector that people were kind of getting hyped up and buying a little mini bubble, little mini tulip mania kind of thing happening there. Palantir, this is a strong name. This is a strong name pulling back. However, the whole market's pulling back. So this is probably just moving with the market as a whole, which is getting a little bit of a lift as we're talking. So if it's just moving with the market, and then we're just going to trade it with the market. If the market holds on here, starts to push higher, then I think you can probably get involved in Palantir if you like it. If the market starts to sell, this will probably start to sell with it. Let me just do something here. Sometimes you can anchor a view app. And yeah, this shows you where the average market participants before this earnings event that really got everyone excited, a little bit under that. So that sits at $68. If it can get above $68, then I think it looks interesting. If it can't, then it's probably not one to take that close of a look on. But this is a nice look. And again, it's just like I talked about, I give the whole rant about shallow pullbacks versus deep pullbacks. We're hoping this turns into a shallow pullback. If this gets into the 50s, if it starts to challenge the low of this candle, in my opinion, it's probably not one that's super interesting for a massive pullback. Amazon. The amount of times Amazon is at my house probably means that this thing should be rocketing. So Amazon is a nice, good relative strength, right? That's a really good thing to look at when it comes to this. Is, right, we talked about how the market has sold off pretty well. We've got SPY, right? Sold off, bounced, and now it's under support. And then if we look at Amazon, it sold off, bounced, and now it's right at or above support. So this one's very interesting, holding on very well. Earnings coming up. Again, we all know Amazon. We all know they make money. We all probably pay them an obscene amount of money. for things that we buy there. But yeah, holding on really nicely. This to me is more of a potential bull flag than anything. And again, I don't like to use like the technical use of the patterns too much. I think it gets too much into that kind of astrology side of technical analysis. But just saying that relative strength essentially means that if they are selling, the institutions, if they're selling the market, what are they selling very aggressively versus what are they not selling at all? Amazon is one of those that they're not, it's not like they're not selling it at all. They're selling it much less than they are something like an Nvidia, which they sold a little bit harder recently. If you look at the downward thrust of Nvidia here versus something like Amazon, the institutions are saying, okay, I'd rather take profits in Nvidia than Amazon. So we have some good relative strength here. Now, two ways to play a bull flag: either buy it at the support here, or you wait for resistance to break if you want a little bit more confirmation. More confirmation will mean a little bit less overall income, right? Because if it goes from here to 250, you're not making as much as the thing's rallying. But you're waiting for that confirmation. You're saying, I'm waiting for bulls to prove to me that they want to bounce at this particular level. EVH, I think it's a healthcare company. Yeah. Evolent Health. Some people like to take trades into gaps. I'll say some people, not so much myself. Looks like a potential rounded bottom is forming here, but to be an actual rounded bottom, we have to see a lot more action to take place. Now, what is a rounded bottom? Again, trying to take the mystical patterns and dogbo what they're actually showing us. Rounded bottom is just a stock that went down, and then it stopped going down, and then it went up again. That's what the rounded bottom makes. In this case, yes, could be happening. We need to see it more up in this $16 area in order to be super excited about it. We have a downward sloping 200-day moving average. I can tell you there's a lot of algorithms out there that look for upward sloping and downward sloping. And right, you short things that are below a downward sloping moving average, and you buy things that are above an upward sloping moving average. In this case, right, we're very, very beaten up. Now, if we get into the gap, there is one school of thought. I've never seen the quantitative evidence to make me very happy of this, but there's one school of thought that says if you get into a gap, you kind of have this vacuum of buyers and sellers, which empirically makes sense. You have nobody who's taken a trade between these two things, nobody of size or substance. So that getting into that zone, all right, and pushing up through that zone could be very interesting. But again, you're buying something that just the market hates. The market hates this name. Whatever was reported here on earnings, the market didn't like. So whatever's going on, they're not a fan of. For me, I want to buy the market darling, and I want to hang out until it's a market darling until a little bit. So we got this one. If I miss anything, or if anyone has any charts to look at, let me know. I got 10 minutes. All right, so I'll hang out here. If there are no questions, we'll go a little early, but I'll hang out as long as you guys have questions. Sorry, I've done a lot of talking today, so I got to chug a lot of iced coffee to make up for that. Here on Zeta, this is an igniting candle, right? This is a candle that is so ugly that shows me that something changed in this stock. Again, I know nothing about what this company is. I don't know anything about what it is that they do. I'm just kind of reading about some of that now. But when you see a candle that occurs like this, that is some sort of change in fundamentals. They've said something that the market absolutely does not like in any way, shape, or form. So when that occurs, I want to see how it tried to make that up and then failed. I want to see that actually make it up. I want to see it actually get to the point where whatever this fundamental change was that happened, the market no longer cares about, and we are okay rallying to the other side of that. This looks like it's breaking down into these lows right here, and then we potentially have a gap to fall into here. So this looks like a very broken chart. We're below the 200-day moving average. It's starting to slope lower. Whatever fundamental event took place, that caused people to sell aggressively, and there's been no sign of recovery after that. Weave Communications. It's a slow burner, but it's a great looking chart, right? So the couple things that I like about this chart, I talked about before, right? Every time sellers come in, they buyers come in at a higher price, right? So we had sellers come in here, buyers came in, and we saw buyers come in at a higher price, and it looks like we are trending the upside on this guy. This one's a little bit slower, and we just got to monitor this pullback. One quick thing to note, when you see candles that overlap this much, look at all of the topping tails and bottoming tails in this candle. This is just something that maybe it's just me being an old man staring at charts for so long, you start to notice. But when they have a lot of these wicks, it means lower volume action. People are a little less concerned about this particular stock. It's not one that's in super favor one way or another. So the whole question is, do we hold this base? If we break down under this base, maybe we're going to sell off and test the 200-day moving average, right? Like we did back here, and then like we did again back here. If we hold this base, start to look higher, then again, that's a good look. See Celsius. I've drank Celsiuses. They are tasty, but this is a broken chart. Right, this was remove all annotations. This was one of those. This was a story play. It's just like we talked about with the drone plays and the quantum computers and all of this. These are story events, and it's okay to get involved when the story is going well, and then eventually it will flip. The pace at which this thing was running was absolutely bonkers to me. Right, from $27 to $100, they 5x. They sell energy drinks. They sell coffee. They sell fancy coffees, and that's all it is. They didn't come up with anything crazy patented, protected, or anything like that. But it was something that people were getting into and starting to buy. Remember, like the White Claw craziness way back. What's that? 2018 now. That it's the same kind of thing. So when the story is good, that's great. When the story changes, and you could see exactly when it happened on this bar right here, something came out that they sold off pretty dramatically, or the 200-day moving average. Talk about this all the time. The only reason I look at it is because institutions do. When that let go, the story was over. And what are they going to do to really excite people now? That's all a question that you can always ask. Is at what point does the company that was $100 that is now 20, what are they going to do? Come out with an energy drink 2.0? It's like the, it's not to knock them. It's just to say it's very, very hard in order to come up with a methodology or come up with a idea to say, hey, this is really the one that's going to blow the socks off of everybody. This is energy drink 3.0. So like Intel, like Nike, like a lot of these names I just mentioned, we're hanging out at support. You want to take a shot at support, you take a shot at support. You have a stop loss in place. You say, I think that this is going to be near the low of Nike, so I'm going to buy it at 26. I'm going to put my stop at, I don't know, 19, something under the $20 mark, and then I'm going to walk away. If I'm right, this thing gets back to 50, so it's like a double. If I'm wrong, I lose, 20, 30%. And then you size accordingly so those things don't, if you get stopped out, it's not that big of a deal. But there's just nothing exceptional here other than it's hurt. Now, I guess I could explain a little bit more why when something's in a downtrend like this, it's so bad. And I think this is something that we can all relate to. At least I can as a trader. And if you guys are honest, you'll agree with me. We have all been in a trade. We've all bought something and just said to ourselves, if this thing can get back to even, I'm out. How many times have we done that? When I was a younger trader, I did it, right? If I can just get back to even, I'm out of this thing, whatever it is that you bought, as the things start to pull down. So what happens is you get a lot of people. You got people who said that, who bought it at 100. They said, hey, if I can get any of my money back in this thing, I'm out, especially if I can get back to even. Then you got people who did it at 50. You got people who did it at 40. You got people who did it at 30. You got people who did it, right, 29. Right, all the way down. You have someone who bought this dip, said, if I can get my money back on this play, I'm out. So what that is, you have a whole bunch of baked in sellers, right? All of these people are saying, if it gets back to this price, I'm going to sell. If it gets back to this price, I'm going to sell. Well, that you're fighting uphill to get out of that position, right? Same with like the meme stocks. There are people who are, well, there's people who think they're getting rich off Bed Bath & Beyond, right? Look at AMC, right? There's people out there who say if AMC gets back to $600 a share, I'm out. I laugh a little bit. I shouldn't. $200, $100, $40, $20, right? $10, $5, $3, right? It's you have all of these people who are so hurt that as soon as you get a spike, you have people that are automatically selling into that spike, saying, "Oh God, right? AMC, like right here, spikes up to $12 one day." There's a whole bunch of people who bought it 50, 40, 30, 20. And they're like, finally, I can get out and move on with my life. And that creates a lot of selling. Whereas stocks that are in uptrends and hitting new highs, you don't have that. You don't have anyone that's saying, oh, I just need NVIDIA to spike up a little bit and I'm out, right? Because NVIDIA's up, right? Everyone's happy. It's an easy sentiment thing, right? Easy just way to look at sentiment. TKO, right? This is one that's, again, that's the opposite of this, of what we saw with Celsius. This one's doing very well. It's just putting in a base at highs. I think a play like this becomes pretty simple because, right, if we break that high base, this thing looks like it could continue. If we break the low of this base, then it's probably lights out, at least for a little bit, or we see how deep the pullback is. But notice the difference. This is above a rising 200-day moving average. This has been an incredibly strong name for a very long period of time as we push higher and higher and higher and higher on this name. And you don't have those bag holders. Right? You can look at a chart pretty easily and not have to be a CMT or do anything fancy with any crazy indicators, and you can see bag holders, right? And if you see a lot of bag holders in your way, then you know that they're just waiting to unload their bags as it spikes in your direction. Bitcoin, for example, there's not a lot of bag holders in it unless you bought it at 100K, and then you're really only down 10%. And hey, being down 10% in Bitcoin's nothing. So you don't see you can get these big spikes because you don't have people that are very motivated to sell. Same with TKO. I don't see anyone in here who's very motivated to sell the same way as Celsius. As this thing dropped from 100 down to 20, there's so many people that are sitting underwater. And if they ever open up their phone, Celsius reported an earnings surprise or a new partnership or something, they can hit the button and they can get right out. I guess TKO, I'm seeing UFC news and WWE news, so they must do something with. Do they own the UFC or something like that? But really, really strong basing at highs here. All right, so we'll do this one last one. We'll do Lunar, and then we will take off. So Lunar is an interesting one, and the only reason Lunars are interesting is yes, it's a story stock like a lot of these, right? It has this same kind of look of spikes up and then crashes back down, spikes up and crashes back down. However, like we've noticed going through a lot of these charts, which is awesome, and this is why technicians go through so many charts, is you can start to see these themes. What we've noticed with a lot of these charts is that there's been these stories, again, quantum computing, drone, all this kind of stuff. And as soon as the story evaporates, the charts have come right back down to earth, right? Over and over and over again. Hasn't happened in Lunar. We're down a couple days, but we're still actually holding on pretty strong. And a very simple technical tool to see if a stock is strong is you look at where it broke out from and whether or not that's holding. So Lunar broke out from right here. So right broke out of this price. That's like $16 a share, shot up to 20, and now we're back. So for me, this Lunar trade, I actually like this one. This might actually be one that I take myself. Lunar trade becomes very, very simple. If we can hold this $16, $17 and start to drift higher, great. Then I want to get involved because it has shown that this area where I talk about all the psychology, there was sellers that tried to short here and they got blown out, and there was buyers who missed this trade. They're getting a second chance. They're taking that second chance. They're getting involved. I really do like the look of that as it's pulling in, if it holds, right? So again, the trade's simple. We break down, we go down to 14, $13. Never mind. It's time to get out. If we hold and start to push higher, then it looks fantastic. So, whew, that was a lot of charts. So I appreciate you guys. We appreciate feedback too. I know StockTwits is kind of really ramping up their productions, are really getting going with this. That was awesome. I went through a bunch of charts. I wrote down some trade ideas for myself, like that Lunar. I hope everybody enjoyed watching this and giving feedback, and please continue to give feedback. If you're interested in anything that I do, my name's right there on the screen. You can just Google Michael Nauss CMT and you can find me everywhere, even on TikTok. And I promise you, you won't have to worry about me dancing. I appreciate, again, you all coming by, and I'll talk to you guys later.